Details, guys. Prashant.
All right, Nigel, thanks very much for that. Well, the market, by the way, the Nifty is down 40 points. So we're at the lowest point in the day. And this is, at least on the index, there is a little bit of pressure which is emerging. This is something we were alluding to earlier as well, that at highs, maybe there is some hesitation, which one is starting to see. And you can, look at the screen, look at the way prices have been moving for the last couple of days. It's been telling you that, but nothing large at all. Just on an 18,000 index, you got a 40-odd point cut so far. Vikash Jain is with us. He's India strategist at CLSA. He's joining us from the sidelines of the 25th annual CITIC CLSA India Forum. Vikash, great to have you with us here on the program. Thanks very much. You know, you've been, I think around Diwali, you came up with a note saying, play safe. So you've been advising caution for some time, Vikash. I think last time you were on the channel, on the program, you were talking about bond deals, the gap with earnings. How has that view evolved now, looking at where markets are at? Go on.
So we kind of turned a little more cautious around middle of August. That's roughly the time when Nifty had hit about 18,000. See, we've been in a period of extended valuation for some time. So in times like these, it's very tough to kind of really pick timing. So we have the help of our sentiment indicator, the India Bull Bear Index, that had got extended to almost a 90% bullish level by middle of August, around the time when Nifty had hit 18,000, right from the rally around 15,000 to 18,000. From then on, we also saw several events. I have to concede that the market has digested many of these events around the Fed, around OPEC, and many of these things rather well. And even the winter, to start with, the worry was that energy prices could start going up around winters. That's been a mild winter so far. So yes, and seasonally, we are getting into a better period for the market, at least over a month and a half or so. So, well, there could definitely be relief after having digested this. The next one is, of course, the December hike, where there is a lot of talk. However, that doesn't take away the overall macro concerns that we step in, with which we step into the next year. So for now, there could be a seasonal relief that we typically get around December. And, and that's something which could help us. But going into next year, one needs to be cautious about the macro setup.
Okay, be cautious about the macro setup. By the way, perhaps on cue, the market is also turning a bit cautious now. The Nifty is down about 40-odd points. The sensex is down 150-odd points. And just pull up the contribution plate. A bit of pressure on the index is coming courtesy the IT stocks. So TCS, HCL Tech, Tech Mahindra, Infosys are all down about 0.5 to 1%. Vikash, hi, good morning, and pleasure hosting you on the channel. Wanted to ask you about some of your overweight sectors. You're overweight on banks, real estate, and energy. Let's take it one by one. On banks, first up, what is the prognosis now? Because I also noticed that you've exited SBI and you've added a couple of other large caps. So do you think the run is done there? Do you stick with the private banks? What's the way forward?
So banks is a rather consensus overweight. That's not really something which is very different anymore. We've been overweight on banks for a while. If you look at the setup, we expect yields to kind of continue rising in that kind of a setup. These private banks could have NIM expansions. So that's something which we continue to play. We had reduced our overweight. The big change that we made when we, around that time when you speak about that note, was we've been underweight IT for a long time. That has turned into a very small overweight, neutral to overweight IT now. In our opinion, the big trade to play would be from here on, particularly in the last few weeks of the quarter of the year, we see a tendency for laggards to play catch up. And there are a lot of laggards that we have in our portfolio at this point of time. From that perspective, it's a rather anti-consensus portfolio that we run. And, IT could be one of them in general. And so from October onwards, IT has not done badly. If you think about this rally, and the rally, particularly over the last 1 month or so, has been largely led by the US. And US stocks have done well. And US was what was correcting over from the start of the year. So all of those sectors which broadly underperformed particularly IT, would be the ones which should be doing well in a US-led rally that the market is seeing. So I think IT is not looking that bad as it used to us. The other out of consensus call that we have is that we're almost zero weight on consumption for more or less the similar reason. I think it's no more an India bottom-up rally. It's more a global rally now, if there is whatever is left of it. So I think on that, we are not comfortable in a rising yield environment with many of these frothy consumer stocks. So those are and other than that, energy, I think energy is one sector which is a bigger laggard. So when there is a laggard play, some of these energy stocks could start doing well. So that's really some of the names that we like.
Hi Vikas, good morning. Good to hear your thoughts. Vikas, what about the city gas distribution companies? There's been a newly appointed committee. They'll be deciding on the pricing out there. How do you approach this space?
So, wearing my oil and gas hat, essentially that new committee would be very important for the next move in energy stocks in general, whether it is the gas consuming stocks like city gas or whether it is the producing stocks that is the oil producers or the gas producers. Various commentary coming from media, from elsewhere suggests that some kind of clarity on the report should come out in coming days. So that is clearly getting watched out for. Let's see what is the kind of gas prices that we get onto, but that could be a clear trigger. I do not, rule out a possibility that this could be a trigger both for upstream as well as city gas. Odd as it might sound, but upstream stocks are building in very low expectation. I think just the clarity coming in could lead to be a trigger for them. We prefer upstream the most amongst the micro sectors within energy. So I think this report could be pretty crucial.
Vikash, yeah, I mean, your point about being overweight, the big laggards is interesting. And one is starting to see that in the broader markets as well, right? I mean, stock specific, out of the blue, things which are down and out, forgotten, suddenly move up. We've been seeing that kind of price action for the last couple of weeks now. In terms of flows, Vikash, what are you seeing and what are you hearing from foreigners? Because you've written in the past about that aspect as well. India within EMs and weights, etc. Where does all of that stand for you?
Sure. So I think that's something which got quite a lot of attention. I made a presentation yesterday at the conference. So I think keeping aside our cautious stance for the more near term, structurally there are some changes which are definitely happening. Even now, almost about 95% of the foreign flows that come into India are in the basket category. You can say that this is not really direct India flow. It's coming into a global benchmark or a global mutual fund or a Asia X or an EM mutual fund, and they are deciding the allocation into India. I think a couple of structural changes are happening. Number one, if you look at, we're getting into a little bit of a conflict in the world, very clearly a conflicting world as compared to the previous decade where it was much more peaceful. There are two broad power axes that we are talking about. If you look at it, India is perhaps the only large country which is okay with both of those power axes, maybe a non-aligned kind of country where both of the axes, both the Russia and the US, want to have India as a friend. That puts India in a reasonably strong position. Beyond that, given the problem that the largest EM market is having, I think there's clearly a favor that India is getting from flows. We've seen certain large pension funds bring down their weight in China, saying that they'd be using half weight of the benchmark, using the discretion to reduce the benchmark weight. Some of those challenges kind of make India far more attractive. And lastly, if I were to look at the depth of the Indian market, simply taking one simple data point that the number of billion-dollar plus market cap stocks in India, we are the fourth largest market in the world. That's after China, Japan, and the US. We are the fourth largest market. All of these three markets are not basket cases. There are flows that directly flow into these markets. I think soon, in a matter of 3 to 5 years, we see India also getting that, is what my opinion is.
Okay, all right. We will leave it at that. Vikash, thanks a lot for joining in and giving us your